Okay, so hi, good afternoon. We're going to present an equity portfolio based on the technology sector. For this, we first going to talk about the general facts of the portfolio, like the objectives, the investor's profile, how we choose the stocks. Then we are going to talk about the economic overview of the United States, then the United States credit rating. As a fourth point, we will talk about each stock we pick. Then we will present the track record, finally a conclusion and the bibliography. So first, about the portfolio, we will start with the objective. So is to elaborate an attractive technology and equity proposal for an investor with a conservative level of risk. For this, we choose six stocks of the technology sector of the United States. Referring to the investor's profile, we have a capital to invest of 1 million euros. Our investor is a person that is close to retirement and has always had the interest to become an investor upon retirement. For this, he has a separate bank account to this proposal, and if it is successful, then he will have an additional saving for his pension. And we are going to use 1 year investment. Referring to the approach, we will use a top-down approach. This means that we make a three-stage analysis, first by analyzing the stock market, then the industry, and using an index to decide which industries inside the sector we are going to take. And referring to the investment style, we will use a growth style. This means that we want to increase the capital of our client by acquiring stocks with an above average earning growth, no matter really the price. Now here you can see the stock picking progress. So first we were assigned the technology sector. For this we choose the United States, and here an index that was the Nasdaq, and from here the 6 companies.
Thank you very much, Maria Andrea. We'll look now to some indicators to know which is status, what is the current situation of the United States, which is the country that involves the Nasdaq index. That is the one that we are using to choose the technology companies. First of all, we have the GDP. We should know that in the United States, it's the country with more gross domestic product per capita in the world. Sorry, it's the second country in terms of GDP in the world, just after China. It's a very big country, a lot of productions in a lot of sectors, but the one that we are talking today is technology, which is one of the pioneers state in the development on computers and other technical and other tech companies. In fact, the biggest tech companies in the world are located in the United States. Then we can look to other indicators, for example, on the durable goods, which is almost it's over 2 on in the index level. We can talk another indicators which will be more used, for example, in instance, the trade balance, but the ones that we are going to talk more and what we think that it will be the more useful ones, it's the one on especially on inflation. If we can move a couple of this information, of course, will be useful to understand, to fully understand what is happening in the United States. But right now, the most interesting indicator is the inflation. As we can see, since the year has started, inflation has risen not only in the United States but in the whole world, creating this kind of crisis that right now doesn't have like very deep effects on the economy, but it's threatening our system. In fact, the central banks around all the world are trying to stop this by raising the interest rates from central banks. In instance, in the next slide, we can see, thank you very much. We can see that the federal fund rates has increased from 0.25 to 0.5. When this presentation was sent, happened in Tuesday, but in just one day, the Nasdaq, for example, fell another 5% after this decision. So we can see we are currently in a very tense situation where not only the Nasdaq but also the SP 500 and other markets, not just in the United States, in the world, are not in a very stable situation because of this inflation. For that reason, for um, a very conservative inversion, it's going to be great in these times of well. In these times when we don't know what is going to happen in the market, but maybe it would be great to see if the markets, especially the Nasdaq, keeps falling to make a wise investment. Um, and that's all in the indicators of the United States. Thank you very much.
Okay, so what refers to the United States credit rating, we have that the United States have the highest qualification in most of the indicators. He received a triple A. This means that the United States is a safety country in order to invest because have minimum political risk, and the private sector is welcome in the country. Now with the stock picking, we will start with Apple. So Apple is an American company that designs and produces electronic equipment, software, and online services. Referring to technical analysis, we can see that Apple is facing a downtrend, even though it haven't reached the breakdown point. So for now, it's good to buy, even though in the short time, it's going to be better to sell. To what refers to the ratios, so we have that Apple is trading at premium compared with the sector. What refers the price book value is not a really good indicator since is higher than the sector, and we prefer the lowest value possible. The same thing happens with the price cash flow. Refer to the dividend yield and the payout. We can see that is lower than the sector. So here we prefer the highest value possible. So it's not really a good indicator. And what refers to the ROE and ROA, we have that are very good values since they are above the sector. Here we have some hot news about Apple and the analyst recommendation. Now to what refers with Tesla. So Tesla is a company that produce electronic cars and focus on the energy generation and storage. So refer to the technical analysis, we can see that Tesla is also facing a downtrend. It's very close to reach the breakdown point, even though it haven't reached it. So it's better in this moment to buy, even though in the short period of time it will be better to sell. Now to the ratios, we can see that Tesla is trading at premium compared with the sector. What refers to the book value is a very good indicator since it is lower than the sector. But when we see the price cash flow, we can see that is a very bad number since it is very high compared with the sector, and here we prefer the lowest value. To what is the dividend yield and the payout, we have that Tesla is currently a non-dividend paying stock. And what refers to the ROE and ROA, we have from the first one is no really a good value since it is lower than the sector, and we prefer the highest values possible. And the same occurs with the ROA. Here we have some news about Tesla and the analyst recommendations that is better now to buy.
Thank you, Maria Andrea. Now we're going to talk about Meta Platforms. Meta Platforms, formerly new as Facebook, which changed its name on this January. Well, it's a multinational technology conglomerate, especially based on social networks. As we know, for example, in instance, Facebook, Instagram, WhatsApp, and other since the month of February. We can see currently it's in an uptrend after suffering a big downtrend since April. It's an head and shoulders situation right now, so we can expect the market to fall a little bit, and then maybe it would be the moment to invest. Regarding the ratios, that must be interesting to analyze. It's well, first of all, we can see that it's trading right now at a discount compared to the sector. And for other relevant information is, for example, in instance, the dividend yield and the payout. Just as Tesla is a non-dividend paying stock. Regarding the ROA and ROE, we can see that it's currently below the industry. As you may know, probably, although these numbers are not the best, as we are trying to do a very conservative profile, those numbers are not especially bad, because it's mainly focused on the long term. Then we can see some news regarding meta platforms are especially relevant. Those who talk about, for example, leaks on information and regulations, especially on the data protection. Another relevant news. And also here we can have the investor analysis and, well, and some recommendations. Then regarding NVIDIA Corporation, it's a corporation really focused on developing integrated circuits, use it in a lot of computers, especially in PCs. It's an American company also, and as we can see, it's currently suffering a big downtrend that maybe started in December, but after a little bit of movement, right now it's another downtrend since April. We can probably expect the market to keep following and being a little bit not very stable. Regarding the ratios, we can see that the company is trading at premium, in fact, very far from what is happening in the sector. And again, on the dividend yield and the payout, of course, as high as the number, better it is. But in this case, we can see that it's not very high, but at least it's giving dividends, not like, for example, Meta, in instance. Regarding the ROI, we can see that it's trading above the market, and regarding the ROA, it's trading below the market. Again, in our investors profile, those numbers are not especially relevant. Well, are relevant, but we can expect those numbers to improve, or at least to generate a profit on the long term. Now, regarding some news on NVIDIA, this company has suffered a great what do we call, like this bear in finance. It's the bear investment, because it has lost a big part of its value on the shares market, but also it's happening in the company is restructuring a little bit itself how their shares are working. In NVIDIA instance, we can see that they are seeking for approval to the company's shareholders to authorize to double the shares. And here we can have the recommendation of the analysis. And now Microsoft Corporation. Thank you very much.
Thank you, John. So now we're going to talk about Microsoft Corporation. It is a world-leading corporation in the field of technology, specialized in the creation of personal computer software, systems, and other applications. Regarding the technical analysis, we can see in the graph that we can appreciate a downtrend for what the best advice for an investor would be to sell. Even though in this graph, we can also see a head and shoulders pattern. So if we look at the stock for a long-term investment perspective, we are able to see that it's going to be an uptrend. And for that, maybe it will be a better option to wait for a general trend to go up again in the long term. So if we look at the fundamental ratio, if we look at the fundamental ratios, we can see that Microsoft is trading at premium compared to the rest of the sector. If we look at the price book value, we'll see that it's a positive thing because its value is lower and we're looking for that. And in comparison with something similar happens with the ROE and the ROA, in which we see that they are high values for the ROE, so that's something positive. But for the ROA, no, we can see slightly lower value, so that's something not very positive, but as it's not very significant, we can still consider a bit positive. And regarding to the payout or to the dividend yield, we can see that it's a good enterprise and corporation in regarding to the sector. So it's got positive values. And here are some hot news in regard of the predictions in the future. Which is that now it's going to be better to sell, but maybe it's better to wait for a long-term investment to see what happens and to see if trends go up again. So then for Alphabet Inc. Alphabet Inc. is an American-based multinational, which one of its principal failures is Google Chrome, and that's why it's very known by everyone. It's a tech company and it develops products and services related to internet, software, and others. So regarding its technical analysis, we can see that the stock illustrates a downtrend, and it's a very significant one. And it is very fluctuating over the last year. It has been very fluctuating with significant tops and bottoms. So for that, if we look at a long-term investment, it's able to see that in general terms, we've got an uptrend that has significantly fluctuated over the last period. So it's for that, we can even see a head and shoulder pattern, but for the last quarter, the trend has been a downward. So for that, we would recommend to sell, or even if it's a long-term investment one, maybe to wait a little bit more. Then regarding to its fundamental ratios, we can see that Alphabet is trading at discount. Also, we can see positive values in regards to the price book value and positive values in regards to the price cash flow. The dividend yield and the payout, it happens as Tesla. It's a non-dividend yield, a non-dividend paying stock. And for that, we've got it 0% numbers. And in regards to the ROI, it's a positive sign, but it's not as positive, but it's not as bad as it could be because it's not a very, very significant difference. And in regards to the ROA, the value of the stock is lower than the one of the sector, which is not a positive thing, but as the same with the ROA, as the difference is not very significant, it's not that bad. Then here's some hot news about Alphabet Inc., which it's relevant to mention that mostly the majority of them come in regards to things like regulation, data protection, and things like that. And so the stocks, the analysis recommendations, which are absolutely neutral because of the fluctuation patterns that we have been able to see during the last quarters.
Okay, so here we have the track record. So first, we can see the percentage we are going to invest in each company. For Apple, we will invest 20%, in Tesla 6%, in Meta we'll invest an 18%, in Microsoft 21%, in Alphabet 16%, and in NVIDIA 17%. This weight we calculated by making a score with the ratios we just present. Here you can see. What regards to the forecast, we have here basically that in 1 year investment, there will be no losses for our investor. And what refers to the currency, since these companies are located in the US, they trade with dollars. So we make the change to the euros. And here we can see that the interest rate for our European investor will be of 1.03%, even though the interest rate of the US investor is 0.15%. And as a final conclusion, so here we can see the technical analysis of all the companies, and we can see that the company with the best ratios will be Microsoft, followed by Apple, and the one with the worst ratios will be Tesla. All companies are facing a downtrend, so we must be aware when